Recession is the buzzword yet again, with the SP 500 falling under the August low, Bitcoin tracking back towards the $26,000 region, putting it in the firing line of retesting the $25,000 lows. We've got plenty of massive stuff coming up this week, or at least what the news is telling us is big, with the Fed speaking this week, the potential of a government shutdown, and of course a looming recession, which basically has not left the psyche of investors for a very long time, despite the market going up over 30% since the cycle low. So in today's video, let's update where we currently sit in these markets, what is going on, what to expect for quarter four of 2023 for the SP500, NASDAQ, and of course our beloved BTC. And of course, I've also got an update for you for Ethereum as well. And for the long-term subscribers, hit that like. I'll let you know where I've been over the last 11.5 days since I put out that last video as well. You know what to do. Links in the top of the video description for our free crypto and economic report. That has come out today. So if you've missed out on it, don't worry, subscribe to it. And you can get the updates right here in our trading Discord. All those links will be on that email when you subscribe. Congratulations to our traders who are crushing it, 200, 800 or 80% returns on their trading. So get on board over there. Guys, you know this is your home of the macro cycle analysis, studying the past to forecast the future. That's what we got for you today. Let's dive into it. As I talked about just a brief moment ago, the narratives at the moment to be aware of so that we don't get scared out of positions waiting on looming recessions. The federal government shutdown. Remember, we've had this before. What happens? Basically nothing. Sorry to wear it down. It's basically a nothing burger. Government shutdowns, here's what happens, yada, 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 so on and so forth. Does the market collapse out of bed? Most likely not. What do we have coming up? We've got the Fed Chair Powell speaking this week. So if you've got a couple of hours aside, half an hour to waste and lose precious time for yourself, for your health, for your family, for just having fun, by all means, go and subscribe to some Twitter spaces that all they do is sit on there and listen to a speech or listen to it yourself. Absolute waste of time. Coming from myself, being in the markets for over 16 years, it hasn't helped an absolute ounce whatsoever. Call me naive, whatever you want, it doesn't help. We just need to know that there is volatility. That's the key thing here. There's going to be volatility around these announcements. That's how the Forex traders trade it. This is forexfactory.com. And this is where you see the high impact news announcements. So all we really need to be aware of is the announcements coming up, the high impact announcements, and that we could expect some volatility. That's the way that it helps. It doesn't necessarily tell us whether we should be buying or selling right now. But what does tell us that is data. And this is where we get into the big, deep data for the markets. Sensitive sectors struggle, raising recession fears. So there's always one reason or another for a recession. Yet, what have we seen? No recession. What else have we seen? We've seen the markets skyrocket. They've gone up since the October low. Yes, they're having a pullback now, but that is what we have been anticipating here. If I can find my sheet right there, years with a big first half tend to consolidate around now. And you know, we've been talking about this particular slowdown and consolidation for a couple of months now. And this is the chart that I've been using. And it's good to go back to these things because essentially it's playing out as expected. I hate to use that line, but I mean, it's what's happening time and time again. Does it have to play out like this orange line? Of course not. There's never going to be a time where you get an exact repeat of previous years. All this is showing is what's happened in previous years when the market is up 10% year to date in June. What happens next? Well, you've had a big move in the market. That's what's going on here. Big move. That's from the October low. Then you've got January. Then you got the March low. And then again, we got this big move up. You have to have consolidation, especially at the early stages when you have the majority of people, and I'm calling it the majority because of what I'm seeing in the news headlines, what I see across Twitter, what I see in terms of replies to tweets as well. So basically trying to take all of this in together as part of the market sentiment And from this point, you really start to see that you need a consolidation at this level of the market, especially after such big moves to the upside. How is all this affecting Bitcoin? Of course, we're going to get to that as well, but we need to understand what's going on in the macro space so that we can get a clearer picture of the headwinds, the old macroeconomics, the old geopolitical risks, all those sorts of things. Every single narrative that we hear thrown out at us, we need to be able to defend them, block them off, because it is basically noise. Because we know over the long term, markets typically go up and they have these periods of pullbacks and consolidations. And when you look back on them, you think, why the hell was I scared out of my positions during that time? Why wasn't I buying at the lows when there were plenty of low signals forming? It's because of all the news and the noise that we hear in the markets, like government shutdowns. This is going to go on as another nothing burger. I'll put my own guarantee on that, and I'll add it to the wall of worry on my Twitter as well. So go over to Twitter, or X, whatever you want to call it now. And I'm covering all of these big narratives that keep scaring people out of positions when this is where we currently sit. This is very similar to what I think is going on with BTC as well. You can see us grinding sideways, but there is the potential for further downside. We still are above the 50% level, the macro 50% now, looking from the cycle low to the cycle top. There's about a 10% move from where we currently are to the 50% level, which is 23,600. Note as well that we haven't closed under $25,000 on a monthly basis for over 6 months now. The last time we closed under there was February, and then March skyrocketed above that level, and basically September, currently in the green. There's 3.5 days to go. I don't want to jinx anything, touch wood, that we maybe get a slight green month, but either way, slight green, slight red, it doesn't really matter. It's basically been a nothing burger of a month when you look at the volatility for Bitcoin itself. Current high, 27,500, current low, 24,900, only at this stage, 1% gain, and roughly speaking, it's only been about a 10% high to low movement. So really not much has gone on in September, despite all of the fear that was thrown around that we're going to get a massive red month. Like I said, touch wood, I don't jinx anything to this point. We still have 3.5 days to go. So maybe we get a nice little flush out and test that 25K and get a nice little move back above. Ideally for myself, not what I think is going to happen, but what I would like to see for a more sound conclusion to this move and a more solid structure would be on a short-term basis here, that the daily gets a bit of a flush out and we basically reset. We come down to test where all these stops were and then get a higher close as well on the market. So we'll come back to BTC and ETH in just a moment. I've got a couple more things to get through when we look at these economic and recession fears as well. So where we were going with this is the smaller sectors or sensitive sectors have moved to lower prices. So basically S&P 500 after small caps and industrials drop greater than 7.5% from their 52-week highs. This has typically come up for some as they call it potentially a recession is coming, an imminent and violent recession, but that's not the case when we look at 20 signals going all the way back to 1933. I guess there were no signals from 1928 for it. So if we want, we can call it a 95-year indicator here. When we've seen this happen, so it's the smaller caps drop from their 52-week highs, what happens? Well, 80% of the time, 1 week later, the market is up. So this is the overall market. 2 weeks later, 70% of the time, the market is up. 75% of the time, 1 month, 2 months, and then 3 months. Basically, these are all very similar. 70-75% of the time, the market is up from this point, from this signal. And then 6 and 12 months later, 80% of the time, the market is up once this signal occurs. So looking 6 months from September, or late September, call it October, that would lead us into late March. The market is going to be higher. Just how much higher? Let's take a look. Average max gain is about 10 to 16% from the current price. And that, if we looked at 10 to 16% from the current prices, that would basically put us at roughly 4750, or if we go 16%, it's going to be above 5,000 points on the S&P 500. So we're going to hit a new all-time high just based on this one indicator alone. If we go to 16%, it's going to be at about 5,000 points on the dot, which would then still bring us to a new all-time high. And if it was only 10%, we're going to be very, very close to that new all-time high again, 4750, and it's going to be above that July top that was put in as well. So that's that first signal that we're looking at, say for Bitcoin. We want to see the S&P 500 reach a new all-time high during this stage of the Bitcoin accumulation. I should say here at these lower prices between that $15,000 and $32,000. Typically what we've seen in the past is that the S&P 500 pushes to a new all-time high. Look at that in 2018. It pushed to a new all-time high in 2019 again. And then the second time, or more than one time, it wasn't the first time that it pushed to a new all-time high. It had to be at least second, third, fourth that it went to a new all-time high for the S&P. Then Bitcoin's bull market, or the retail bull market, when it gets exciting and the masses come in, that's typically when we're looking at Bitcoin pushing to new fresh highs as well. Bitcoin started to push to new fresh highs in late 2020, and you can see that the S&P 500 also hit new fresh highs in early 2020, and then later again that year after we had the COVID dump, V-shaped recovery, which caught a lot of people by surprise, and then again it started to push to new all-time highs. That was when Bitcoin started to move to its new all-time highs, or hit its fresh retail bull market, which started around October 2020. It did have a bit of a run on early 2020. COVID came in, started to bounce back very quick, and then the breakouts mid 2020, which basically lines up in about 12 months time with mid 2024. So we still have some time left at these levels here, which means that maybe we do see a slight move to the downside. But if you want something actionable to take away from it, this is pretty much setting us up in that beautiful sweet spot period of DCAing into Bitcoin before the masses really catch on, and before the bears flip, the macro bears, that is, the macro bears flip to bullish. Most will probably, or let's say some, will likely have to flip more so to the bullish side once 32K breaks, because there's still a reason for them to think that we're going to break to new lows. Same thing happened in the previous cycle, but not even a pandemic. A worldwide pandemic flash crash could take Bitcoin's price back to the cycle low. So that was a worldwide pandemic. And one might argue that we've already seen a pretty significant move to the downside during the banking crisis in March of 2023, which essentially didn't even turn out to be a crisis at all, at least for the stock markets, because they have been rising and rising and rising ever since that banking crisis low. Yes, some might argue we're going to go back to new fresh lows, but what I want to say here is keep an eye on these current support levels so we get an idea of where we sit in the market. For the NASDAQ, we're still relatively high at these levels, just digesting that really significant move to the upside, and that price is 14,400. If we needed to come back to some other previous support levels, if this was to break down, we've also got the highs here at around 13,800, the previous highs here at 13,300 and 12,900. So there is a lot of support to the underside of this market. Same deal goes for the S&P 500, and that's what I've got this rectangle here for. There is a lot of support to the underside here, which means we could potentially be coming into another low for the stock markets sometime in the next couple of days or weeks as well. Plenty of support down here at 4,300 points, at 4,260, at 4,240, and at these previous highs here as well, going back to February, at 42. So basically between that 42 and 4,300 points, there is a lot of reason for potential support and a reversal. Just like we looked at with that August low, we had some support, there was a reversal, and that reversal pushed us all the way back up nearly 5%, and that lasted 19 trading days or 28 days, basically a full month to the upside. And we're getting a similar thing to the downside now, rounding out in terms of trading days, about 7 days to the downside. So about getting closer to half that move. Okay, keep an eye on these particular areas now for potential reversal. Remember, we're not trying to catch the exact low, just somewhere near that bottom, okay? So that's the S&P, that's the NASDAQ. Things look like they're moving, especially when you look at the small caps indicator here as well. Remember, as we put all of these indicators and signals together, stuff that we talk about in each video, so make sure you are subscribed and like the content so it comes through in your channel. Thank you to all of the subscribers who have been asking where I am. I'll get to that in a moment as well. So all the loyal guys here, thank you very much. And we piece it all together because basically the news tells us one thing, the charts tell us another. The data tells us the same thing the charts are telling us as well. In these two cases, 1937 and 2020, it proceeded to have an imminent and violent recession. Out of these two exceptions, it's basically never happened, or it's not even it's basically a nothing burger, and the markets continue up 80% of the time to the upside. So we really need to be able to keep that noise aside. Next thing is the fourth quarter. So we want to know where the markets are going from here. Don't bet against the fourth quarter rally just yet. So obviously the market's been down, getting a red September for the S&P. But for the fourth quarter, what could happen from here? S&P 500 performance went up year to date between 10 and 20% at the end of September. That's what we're seeing right now. Are we up 10 to 20% year to date? Let's have a look from January to where we currently sit. That's 11%, so between 10 and 20%. Basically, year to date return end of September. What does October look like? Basically, average of 1%. It's higher 68% of the time. Quarter four is up 84% of the time with an average of 5% increase. So 84% of the time, the market is higher than the end of September. Potentially, we're going to see higher prices. That goes in line with what we're seeing with the other data. It goes in line with our roadmaps here. It goes in line with the other roadmaps that we were looking at when it came to the pre-election years as well, which means we're potentially going to see higher prices starting, well, at least going from that quarter four, and potentially probably later into that quarter four as well, which will start to move higher, catch a lot of people off guard, and then start to push us into those new all-time high prices. Just going with the data here. If you don't want to believe it, that's absolutely fine as well. And I think that's also going to help out Bitcoin in the longer term. But as always, we're back in this trading range. Do we see a retest of the low? Do we see a little bit further at 23.6? I can't tell you the short-term conclusions here, but I dare say I still think that this low is solid. We're looking at 19.5 March low being pretty solid, and that cycle low is in as well. Remember, we've looked at these two being very, very significant lows. Once this 32K breaks, I dare say that 25K is not going to get revisited in this cycle. Okay, so that's what we're looking at for Bitcoin there. The conclusive if-then statements I can give you about BTC, which then puts us into the dollar cost averaging into that middle part of next year based on the data that we have looked at for the markets. Similar sort of thing goes for ETH as well, still just holding up above 50% at $1,500. Is it another dollar cost averaging? Potentially. It is slightly weaker on its BTC ETH or ETH slash BTC. It's coming up to the critical supports here at around 5.2%. But nonetheless, it's been a slow grind compared to what happened in the last cycle, where it basically bled out really quickly and then started to bleed out much slower into those lows. Time is coming to an end soon. Still got a bit to go there. So I think the dollar cost averaging is probably not a bad way to go for these particular assets. Now, last thing is, where have I been? I'm in Greece. That's what's been going on the last 11 days. I thought I would take a quick break. If you want to follow me, I'm posting over here all the time, but you're probably just going to see water, blue ass water, me diving in and eating food. I don't, if you don't want to follow, I get that as well. But this is the real account here. 25.5. I'm not, I don't have the blue tick on this one. I'm not going to give Zuckerberg any other money than he actually needs for this stage. And if that's the one you want to follow, it's in the video description as well. And I typically do Q&As over there as the market starts to pick up and get a bit busier. So if you want to get involved in that, make sure you are following on my Instagram over there. All right, guys, links in the top of the video description. The new weekly report is out if you haven't got it already. Make sure you go and sub to our free Discord. You'll get those results. And congratulations to you guys who are hitting up the trading and hitting those good profits right now. All right, that's it for today's update. I'll potentially be back tomorrow as well, back to back. Let's see if we can do it. And I'll see you guys at the next one. All those looming recession calls yet again So it's been over 12 months that they've been talking about it and nothing has come to fruition. All we have seen that's actually happened is higher prices over the longer term, pushing the macro further and further into this bull market. Eventually it'll break and there will be a collapse. Things are not looking like that just yet. Hopefully that's helped you out. I'll see you at the next one. Like, subscribe. Till then, peace out.